Hey everybody, welcome to Alpha Cave once again. I want to talk a little bit about biotech stocks today because we like to buy these stocks. They're very interesting. It's something new, it's something exciting. Some of these companies are just growing and you want to get in at the very beginning sometimes of some of these companies. But I want to mention some of the pitfalls. We've been investing into biotech stocks for a few years now, and there's a lot of pitfalls that you have to avoid if you don't want to lose money. So let's start going through some of those, and we'll start with the very first one, is going in too early into a biotech stock. Now, going in too early into a biotech stock works, but you have to get rid of it fast. So if there's news, if there's something that is sparking interest in this company at this time, say their phase 1 study was successful and looks good and it's some new type of treatment for some disease that is unusual, or there's not a lot of treatments for this disease and the phase 1 was great. If you go in and the price bumps up, perfect. That's a great time that you went in early and it bumped up. But what you should probably end up doing is selling at that point. Sell on that news, get some money back, and then wait, because eventually that price is going to drop again. And as it drops again, then maybe you can go back into that stock again and try to make more money if maybe phase 2 is coming up and they're starting to see great news. And then you go, okay, well, maybe this is the time to go into this stock once again and try to make some more money on it. Now, remember, we're not professionals at investing, but these are some of the things that we have picked up over some time of investing into biotech stocks. And if you make these mistakes early, you might be fearful of going back into the biotech stocks. But if you catch these mistakes or you learn from what we've learned, then maybe you can invest into these stocks safer and do good. So you do see a lot of people invest early into these biotech stocks and then sell on the news, get that money back, and then wait on that stock to drop, or maybe not even invest into that company once again. So that's something that you can think about when you're investing into these companies. Next is holding them too long. So if you start holding these stocks too long, say you did go in a phase 1 study and you're waiting for that phase 3 result to come out, a lot of these companies are going to take years and years and years before they get to that mark. And you're going to see the stock price either go up or down, definitely. And if you get in very early, say it was only pennies at that time, and now it's $1, $2, $3, you're thinking, okay, I'm doing great. I'm going to wait until this company puts out this medication. There's no benefit to waiting unless there is 100% certainty that this company is going to put out this medication. There's more benefit in trying to sell the stock, making the profits that you've made, and then hold back again and wait to invest into this company at a later date again. So if you hold on too long, sometimes you end up losing your profits. And there's several reasons for that. A lot of times you start seeing reverse stock splits. Reverse stock splits will kill you because now they're giving you, less stock for what you had. So the price artificially goes up, but these companies that are doing this, they're doing it for a reason that their price on their stock is not meeting the criteria to stay in the stock market, and so they have to do that. So then what happens is that the stock price comes right back down again, and you end up with another penny stock again. And so that's a big reason that if you hold on too long, you're going to start going into these reverse stock splits or something else. And that's not what you want. Next, the mistake people also make is they do not look at the financials of the company. If you're not looking at the financials of the company and how they're doing, now most of these companies you can expect that they're losing money, but some companies have good backing and they have good reserves that that they have enough money to finish off a phase 2 or a phase 3 study. And then you go, okay, well, they have enough money to do these studies, and then it's a little safer to put money into that company. If you look into a company and they don't have the reserves, and that means that their studies are going to be slow to come out, they're going to have to sell more stock, They're going to do reverse splits because their stock price is going to go down and plummet most of the time. And so you have to be careful and look at those financials so that you can see if it's worth putting some money into this company. If their financials are off, then it's not worth putting your money there. So we will lose money a lot of times if you do not look at those financials. The next mistake that people do is holding on to these companies once the drug has been approved and now you're just waiting for it to be manufactured. So we can look at several examples that have been out there that show that these drugs have been approved, but however they're either bad-mouthed by some writer, as happened with PTN, and therefore they get less traction and the price of the stock goes down. Or PTN is a great example of this. I think they have AMAG as their partner. I have not seen any drug reps come around here promoting their medication, which is for sexual dysfunction in females, which is an injection. I believe it's called Valesi. And you know, if you don't have the partner that's really pushing the medication, then you don't know how well this medication is going to do. And when it doesn't get sold, then the stock price is going to come right down. And an example of a medication that got approved and people were excited about, and I thought, and a lot of people thought, that doctors would be excited about having an inhaled insulin. That's already failed twice out in the market. By one company, they sold to a different company. They tried it again later with a different name and it still failed. And you know, there's some things that sound good but they don't get sold, and if it doesn't get sold in the market, then it's pointless to hold on to these companies. So if you're holding on to stock too long, you might lose. So my guess is, if you are actually going to hold on to the stock, wait until you reach that PDUFA date. If it's approved, the stock rises in price, sell at that point. I would sell at that point, and then I would probably buy it back if I thought that the drug or the medication or the product was actually going to do fantastic. Other than that, I think I would just get rid of the stock at that point. So those are some of the pitfalls that people have when they are looking at biotech stocks. Maybe they don't follow those rules. I think those are rules that I now follow for these type of drugs and these type of companies. I'm following that with Zosano, which is coming up on the 21st of this month, and I'm following with Moderna. Moderna, I have a few stocks, and I will sell once that vaccine comes out as well. I don't have any interest in holding those any longer than when the vaccine comes out. So guys, thank you very much for watching. Like and subscribe. We are looking to get a lot more subscribers here. We want to continue doing these videos for you guys, so take care. Have a good day.